What's up everybody, Tom here with another video. In today's video, we'll be discussing the stock market news for the week ahead. We'll also be taking a look at our technical analysis levels using our top-down approach for the S&P 500, Nasdaq, Bitcoin, Tesla, gold, dollar index and more, just to really dial in on exactly what's happening in this stock market. We saw 10-year treasuries, 20-year treasuries spike on Friday due to, of course, those non-farm payroll results. The question is, what does it mean for the stock market after that instant recovery near the close? Stay tuned. Well guys, as I told you on the live streams, those non-farm payroll results can be very hard to interpret and you really need to let the market sort it out in the first hour. We had the markets going down initially, dollar index bulling long, spiking treasury yields, all of those types of things. But by the end of the day, the markets had made the decision that the news was good and it was time to start stacking up on discounted stock. Microsoft, Apple, Google, they were all moving. Tesla, however, was moving down during most of the session and then even ended down 3.78. And that could be just more of a repricing of this stock and EV stocks when compared to maybe the rest of the market. Hypergrowth stocks were down as much as 10%. We saw Square get dumped really heavily and then picked up into the end of the day. Same with one of my favorites, Cloudflare. So many things were moving in the markets. When we take a look at the indices, you can really see how much volatility there is in the markets right now. IWN, the Russell 2000, we also had Nasdaq down as much as 2 to almost 3% through the first half of the session. But by the end of the day, every single thing was green, and actually IWM was 2.12, leading the charge in terms of the strongest index. It's amazing how fast everything in this new algo trading, Robinhood trading world is, and this is why you need to be on top of the news whenever possible when you're looking at trading or even finding investment dips. XLY even rallied, which is consumer discretionary. I think a lot of this is to do with stimulus coming out and of course being approved, and at the same time we had energy being one of the best sectors, and we continue to think that energy financials will both be pretty good sectors, though I think energy will be the better sector in terms of recovery for now over financials, even if oil doesn't move that much. Just energy is underpriced to oil, and I clarified that a little bit on the streams. Biden Democrats prevail as Senate approves $1.9 trillion COVID relief bill that returns to the House now. Of course, this will be approved. We saw 50-49 vote, pretty close. And really the big thing here, or the big story through this, is that not every single person may be getting checks, and some people won't be. Let's say the ultra rich may not be getting checks, but everybody in the middle class and upper middle class probably will be getting them. I'm not sure how much of an effect this has on the markets, but let's just say a little bit less potential money going into the markets. I don't think it's really that big a deal for the stocks. However, it's interesting to see that this is the way they've chosen to roll it out this time. Just before we get into the rest of the market, I just want to reiterate my thoughts on March and my thoughts on April moving forward. I've said many times that I think April is going to be a great month for the stock market. Historically, it has been. It's been a very good month to be invested. And March generally is a lackluster month with a bit of up and down all around. We have seen a bad start to March, but with that incredible recovery through Friday, I think it's clear to say that the bulls are partially back in town for now in the markets. Let's take a look at the volatility index. The volatility index, or VIX, fell from 30 all the way back down to our 24 level. It's been down here a few times, and we may see some extra volatility come in as the market tries to decide what exactly is fair value. But after that SPX move, it was pretty clear to see that there is still a lot of buyers in the market. The S&P 500 bulled heavily into the end of the day. Here's the dollar index. Now, this has me interested because this is basically proving that we've closed above the 20 exponential moving average on the dollar index on the weekly chart. This close above the 20 really signals dollar index strength for now, up to possibly the 94. And it would make sense as well because we have a 50 exponential moving average right around that level. 94 could be the target here for dollar index. We may see some weakness this week where it comes back down and it does what we call a test from the top down, where we have the market moving down, testing around this 91.60 zone, the previous peak resistance, and the 20 exponential moving average. And then we may see further bull side pressure from the dollar index. If we scroll down into the daily, you'll just see how important, how big this move's been. It started to move away from the 20 exponential on the daily. So maybe a little bit of a pullback back to this zone, finds the 20 or something like that. And then we start to see the movement up to 93 and possibly 94. If dollar index strength does continue, this may kind of make the markets move sideways or move kind of in a range. But I still think that that big bull move from the S&P 500 shows us that there is a lot of demand and a lot of money sitting on the sidelines waiting for corrective dips. And it may be all we get, and you'll see why when we go through the analysis a little bit later. Treasury bond yields, 10 years, they spiked as high as around 1.62, 1.63. We saw a close through that 1.45 barrier that was there through 2012, 2016, and 2019. Now, it's not unheard of for bonds to move quickly. Look back in the history of whatever asset class that you're moving into and understand how it generally trades. Usually bonds will reprice quickly to what their expectation is on the 10 years and then hover in a range. So I think that we may continue maybe a little bit up. Maybe we get to the 2, possibly some resistance there and support there as well through these treasury yields. And then we may get a gradual decline back down to the 1.55. I don't expect us to ever bounce through 2. And I think we're going to start to correlate or start to range kind of in the markets here. A lot of people make a big fuss about this, and it's definitely a scare tactic. Some people may disagree with me, but I always go back through the history of what's happened in yields. And you can just see clearly here, we've had some very large spikes in the past through the GFC into the 2010 period, 2013, 2016, etc. In fact, look at this GFC. The yields went up so much, so quickly. So you can actually correlate that to exactly what was happening in the market and the sectors that were performing well. Because this is the reprice after the overreaction. Here's the overreaction. This is now the repricing event. Let's take a look at what happens with Bitcoin and what happens with gold, silver from this. So dollar index is strong. You would think that that would put downward pressure on Bitcoin, but actually Bitcoin is holding very, very well. And I've put this 49,500 level up because what a great little setup this is. Resistance, we've got the trough, we've got the peak here at the resistance, we've got the higher trough, and we're actually putting pressure on the 49.5 probably during the time of this recording being updated and uploaded. This is a key resistance because we break through here. Where does the market want to go to? It's going to gravitate towards the 52,000, which has just been incredible resistance for now for Bitcoin. It gets through there. 55,000 is the next go. Take a look at what we saw on the stream. This is just a great setup for everyone to look for in the future. Many rejection wicks around the same level followed by a higher high. So we saw a higher high. We don't even need to see the close. We know that we had some resistance previously at 49.5, which makes that our take profit zone. It's more than a one-to-one. It's a great little day trade opportunity, this one. I also take a look at the daily here. And if you look at the daily closes on Bitcoin, both look very, very strong. Nice rejection wicks with strong buying momentum. So through the 49.5 into the 52. If we get through the 52 this week, the 55 gets exposed. And for the bears in Bitcoin, really close underneath this. So if you get a significant close, like a daily underneath this zone, we go back down to the 42, 43 range, and then hopefully find some support on that 50 exponential moving average on the daily. So I think that Bitcoin's looking long. What do you guys think? Let me know in the comments down below. I'd be very interested to see what people's thoughts are for March. March, a historically bad month for Bitcoin. What is your target price for Bitcoin by the end of the month? Let me know in the comments down below. Gold really approaching a very critical point. 1675 has been our target ever since we broke through those 1765s. It's been a great trend to be on. Hopefully you guys have gotten some part of this. It's great to understand that when you use TA or when you use this analysis tools, that when you break through key support or resistances, there's a participation phase that begins, and that participation phase pushes us down into the next zones. And that's what happened here. So we've got a trend line through the previous lows. We've got the previous supports and resistances, and it still maintains to be our key level of support that we're waiting for. Now, do we catch the falling knife? Do we get stabbed by the knife? We don't want to do that. What we want to do is we want the market to come down, consolidate on a significant time frame, because this is a weekly, so it could be a daily, a 4-hour, or even a 1-hour, and then break to the upside. If it happens, then we're happy. If it consolidates here and breaks to the low, well, there's further selling to be done in gold. Probably 1600 becomes the next target. So try not to catch the falling knife in these types of events. Follow the trend, because it is generally your friend. 25.11 on silver. Silver broke through our trend line last week, signaling the 25 level. If we get through the 25 and close below it, you'll notice it hasn't done that yet. Back to the 24, and I expect that to be probably the major decline here on silver and recovery to start and ensue. Basically, this would be previous heavy buying support. There's a huge amount of weird buys that come through 24. Silver likes its 50 cent and $1 increments. So if it moves down here, we've got a 200 simple moving average on the daily. We've got a rejection week before. Hopefully we create structure here and start to move up. I would leave this trend line on your charts, because if we do move up, it's going to act as some form of resistance in the future. So it's worthwhile leaving it there. But 25, if it doesn't hold, 24 seems inevitable. And then hopefully structure begins to come through for silver bulls. If it bulls from this zone, yes, this trend line is going to act as resistance, and it may potentially sell off that level. For Tesla, it was another story of another declining day, but we're getting close, if not have already reached the lowest point that Tesla was going to reach. We had our targets originally for 700, 650. Then we saw continuous lower highs, which made me think very, very weak pressure was going to come through here for Tesla. It was a little bit overpriced by many people's standards, but the big thing is it had run incredibly hard with no pullback. Remember, we never had any negative kind of sentiment really on Tesla from the perspective of price action until just recently. We got as low as around $540-ish. Our target was 500 if we broke through the 600 zone, and maybe down into the 450. So I still think that this range here is a possibility for the market. If the market shows weakness, we've already seen Tesla, NIO, others, they're not coming along with as much bullish momentum as the rest of the market. So hypergrowth stocks are looking weak. 500 is possibly open, even the 450. That's a Fibonacci of the entire move up. So you'll notice it's right in that perfect area for our favorite fibs. But if you're a bull on Tesla, look, don't despair too much. It could all be over once we start to create structure. So if we create, let's say, a double dip here and it goes back down, creates a double bottom, makes a lower high, and then makes what we call a lightning bolt, so something like this, that's going to be a signal that this sell trend is already over and you're back into being a bull. Because at this stage, it's just been a series of lower highs all the way down. We need Tesla to find a base of support, whether that's ARK purchasing more, whether that's something else, I don't know yet. The price action looks short for now, but it could change with those types of events, those lightning bolts, etc. Let's take a look now at the US 500. Well, that was certainly a short-lived sell-off. We didn't quite reach the 3,700. We got around 3,720. We tested it again. We got 3,730, and what a buy. Look at this thing, 38.42. Now, it hasn't cleared all of the zones yet in terms of being incredibly bullish, but remember, if we do get through all of this, we continue on the bull side up, we're going to eventually meet this trend line over here, and that trend line's worthwhile having on the SPX, the real market. This is the US 500 futures here. The close was incredible. The movement throughout the day was obviously very, very large. We saw it get through the 3,800, which initially it resisted and sold off from, almost making a new low. And this shows me that there's a lot of buying pressure. In fact, it could be the correction over. And the main reason I say that is when you look at the weekly, and incredibly enough, it actually almost reached that 20 exponential moving average. And that has been throughout this bull cycle, the one moving average that has generally been purchased off. So for the bears, now you have to close under 37.20 to even expose 3,600. You will if sentiment goes back down that way though. We've basically got a long leg doji here on the weekly. So you all know how I look at long leg dojis. It's an indecision candle. I would scroll in on this one. I would literally put resistance at the top, support at the bottom. I would set both alerts for a close either way. A close above, not only are we going to crack new highs, we're probably going to the 4,000 area. A close below, that brings in the 3,600. And I'm pretty confident in those levels because long leg doji is indecision. You close above or below indecision, you've made a decision, yeah? We've made a decision, guys, and it goes to the next direction. Yes, that's a huge range, but in between here, it's hard to tell a very clear, larger time frame direction. It looks way more bullish than bearish right now. It's come off some nice levels. We were correct in the pullback so far, which has been good. But I'm starting to think that this is the time where we start to see a movement back up. And the reasons why is just that huge bullish pressure that came through for the market. It's unlikely that that was fake. It's more likely that Wall Street was taking out and shaking out everyone with those negative 30% on some of the hypergrowth stocks. And now we're moving back in. Remember, it wasn't an all market sell-off. It was only hypergrowth and some overpriced tech stocks that fell off. Not as much things like financials, things like energy and other sectors that have been doing well. QQQ could be the only thing that really shows us this bullish pressure. Daily here, off the 50% fib of the last move, resistance, resistance, resistance. We talked about this on the stream. This was also acting as support. It acted as support again, the 300 level psychological, and we've got now a bullish hammer. So what do we know about bullish hammers off a great level of support? We look for a little bit of follow through. Once you get that, then you're moving towards pretty much breaking through this previous support, going towards the 320. The 320 will be tough because you've got two moving averages there. You've got the 20 exponential and the 50 exponential all sitting at the 320. But if you get through that zone, you break off these highs, guess what? The QQQ is going to a new all-time high. You get past this resistance, all-time high, get your trend line out and start thinking about the next levels. You are seeing some pretty big discounts. We luckily got this corrective phase correct so far. And the actual Nasdaq or the QQQ hit the levels that we thought it would. The S&P didn't quite, but the QQQ did, and that's because the tech stocks were the overvalued ones, and they were the ones getting hit round by this increase in yield. So look, I want to wish everyone the best this week. Obviously, we'll see you live in the streams. We're starting, of course, Monday live stream about 3 hours before the market opens. I've been having a great amount of fun with you guys. It's an awesome time. So definitely subscribe, definitely hit that like button, and we will see you there to hopefully get some rocket ships to the moon. Bye for now, guys. Catch ya.